Okay, so glad you're back with us for another GoldSeek.com Radio Gold Nugget segment. Today's featured guest, Jim Rogers from his home office in Singapore. Jim Rogers is an author and financial commentator and a successful international investor. It's a pleasure to welcome back Jim Rogers in his Singapore office.
I'm delighted to be here, Chris.
Let's start today with the equities market. And your last appearance on the show, equities were at all-time highs. And last Friday, the Dow Jones closed at the highest point in its history. Clearly, the $85 billion a month in debt purchases by the Fed is a major factor here behind the scenes. You say that you own shares, but you're getting nervous that ultimately this could end badly. What do you think?
Well, I know it's going to end badly when it ends. It doesn't mean it's going to end anytime soon. All the central banks in the world have continued to print money. And as the Japanese said, they'll print unlimited amounts of money. Bernanke said he'll print $1 trillion a year, et cetera, et cetera. So, it's not ending yet. But when it does end, Chris, it's going to be a mess for all of us. Because, the world is floating on this unbelievable artificial sea of liquidity, which is pretty staggering when you add up the numbers. But when it ends, I don't know when it's going to end. It's not going to be fun.
Do you think that Dr. Bernanke is handing out stimulus in order to provide a grand exit for himself and maybe a nice transition?
Well, no, I know Bernanke's not going to end it because he knows what's going to happen when it ends. So he's not about to end it. And the new lady is very keen on money printing, so she's not going to end it. She's certainly not going to come in and the first thing she does is have a disaster on her hands. So no, it's going to continue on for a while. I'm not quite sure what's going to end it. It may be that the market eventually will just force them to end it, but even if the market just says we're not going to take your paper anymore, the market's not going to say that anytime soon. So neither the market nor the central bankers are ready to end this.
You've gone on record recently noting that the Fed is supposed to prevent economic slowdowns, but according to the Fed's own data, its civilian employment population ratio is near depression levels. You have nearly 100 million Americans who simply aren't working. They're able-bodied and ready to work. Did the Great Recession truly end, or is that just more government hyperbole?
They would aptly point out that we still have very high unemployment. Even with the fake numbers, we have a high unemployment. And as you penetrate into the real numbers, you point out that the unemployment is high. No, it never ended. The stock market ended, but that's because the stock market went up, but that's because Bernanke and the rest of the central banks in the world printed staggering amounts of money. But the real economy has not done nearly as well as the stock market.
You've noted that the next financial crisis is inevitable and could be far worse than even 2008 with the Great Recession. Who do you believe will be the ultimate victors, or will the entire world suffer in the next recession?
Well, America's the largest economy in the world. If America suffers, everybody suffers. Europe has got big problems. Europe as a whole is an even larger economy than America. So, Europe's going to suffer, America's going to suffer, which means the rest of the world will suffer too.
Gold investors have enjoyed 12 consecutive winning years. It's now in a correction mode. Are you still watching for a 50% retracement from the 1900 peak, similar to what the Goldman Sachs crowd is calling for, about $1,000 on the precious metal?
Well, I don't know if there'll be a 50% correction. I do know that 50% corrections are normal. That's what happens in all markets. It's not unusual at all. So I suspect we might have a 50% correction before it's over. But that's not a prediction. I suspect it will happen, but I'm not buying. I'm certainly not buying at the moment. I think there'll be another chance to buy gold in the future, so I'm not buying at the moment. Whether it goes that 50% or not, I don't know. If it does go that high, I hope I'm smart enough to buy more.
You've also noted that when food shortages occur, war inevitably breaks out. When a major power starts to decline, the burgeoning nations vie for power. Is the stage being set here for another world war?
Oh, yeah, well, yes, that doesn't mean it has to happen anytime soon, Chris. No, we're certainly setting the stage for another war. America's going deeper and deeper into debt, and it's certainly, if nothing else, a struggling power. With China on the rise, there's going to be some kind of conflict somewhere, but it may not happen for decades. It doesn't have to happen anytime soon. But it's certainly going to happen. unfortunately, we have not outlawed war at all. War's been around for thousands of years, and I wish we could outlaw it, but I'm afraid we cannot.
You know, the U.S. dollar has been suffering in recent months. Some folks are calling for perhaps a retest of the all-time lows on the greenback. Do you concur with this notion? And if so, what do you think it could mean for the markets?
I expect more currency turmoil in the future, and I suspect people will go to the U.S. dollar when there's currency turmoil because they don't know what else to do. I actually own U.S. dollar at the moment, and I don't have any confidence in the long-term future of the U.S. dollar. It's going to disappear in the long term. But in the meantime, I own it because I expect more currency turmoil coming, and people will flee to the dollar, rightly or wrongly. Wrongly, in my view, but that's what they're going to do. So I own the dollar as a result. But, Chris, you're exactly right. In the longer term, the dollar is it's going to disappear. We're printing it as fast as we can. We're debasing it. All paper money is being debased, but especially the U.S. dollar. And America's the largest debtor nation in the history of the world. This cannot continue. Never has in history, anyway.
As we wrap up here today, I wonder if you could tell folks what you're watching for. You tend to be several months ahead of the curve here.
Probably the most important thing going on in the world right now is in China. The Chinese government is having its big meeting. It's a plenary session, as they call it, and they're going to announce what they're going to do in the Chinese economy for the next 10, 20, 30 years. In 1978, this conference led to Deng Xiaoping opening the Chinese economy, which has certainly been the most important thing in the last 35 years. 1993, they had another one that had gigantic consequences. They say that this was going to be as important as the one in 1978 and 1993. I obviously have no clue what they're going to do, but I'm watching it very closely, Chris, because whatever they do, it's going to send a signal to some industries. Some industries are going to receive a lot of money and a lot of incentives when the Chinese decide what to do, and that's going to have a big effect on various companies, various stocks, China and outside of China. So I'm watching carefully. I hope we'll know by the end of the week or early next week. It's going to be more important than whatever the central banks do in the world are certainly going to be more important for some industries than even what the central banks do. So keep an eye on China.
Jim Rogers, we want to thank you so much today for taking time from your busy schedule for us.
My pleasure, Chris. Anytime. Thank you.